Hello, everyone. My name is Samia Hassan. Thank you for joining us for the Thai Global Summit for our session, What Makes Dallas Tick? It gives me great pleasure to introduce our moderator, Ram Viswanathan. Ram is President and CEO, Nathan Research. He wears many hats. He's a seasoned executive, serial entrepreneur, angel investor with global supply chain operations experience in retail, consumer goods, and telecom, Big Five management, consulting, and software. He is actively engaged in mentoring, nurturing, coaching, and funding startups. As president, board, and charter member of Thai Dallas, he's actively engaged in funding businesses in the startup space. He is also the founding chair of the Young Entrepreneur and the Thai Dallas Women's Program. Welcome, Ram. Over to you.
Thank you very much, Samia, and it's a pleasure for me. It's always a delight to have Dayakar and Sumit, my good friends, and have them share their perspectives on what's happening in the capital world. Let me introduce them to you all. Dayakar Puskar is co-founder and managing partner at Dallas Venture Capital. He's a serial entrepreneur, visionary, and has been involved in a number of different early stage startups in cloud, AI, ML, mobile technologies, both here in Dallas and in Silicon Valley. He is, apart from this role at Dallas Venture Partners, is also executive chairman at Motivity Labs, Global Outlook, and a few other companies as well. Sumit Gautam is a portfolio manager and founder of Scalar Gauge Fund. Prior to this, he was a partner at Herzl Capital Management and has had a number of different roles in the private equity world prior to that, and in consulting organizations like Bain, and has also been involved in a number of different startups as well as public firms around the country. So it's my pleasure and honor to invite both Dayakar and Sumit to this panel discussion. The theme we had set for today is centered around what is happening in the Dallas-Fort Worth area, but also going beyond that, considering the perspectives and the insight that they have, to be able to share with us their thoughts and ideas on what's happening in a broader sense as well. So, anything you want to add to what I provided as introduction to you, Dayakar and Sumit? If I may have not done complete justice to your profiles.
No, I did a good job. I'm fine with it.
Thank you. All right, thank you, gentlemen, and thank you everyone in the audience. One of the things in this format is we're not able to exactly see who's all there in the audience, but that's fine. We will get some feedback from our chat board. But let me start out with this overarching theme of Dallas. It used to be considered a sleepy place, devoid of action, barring some oil and gas activity, some real estate activity, and so on. But things are changing rapidly. Just in the last few weeks, we saw some VC firms, including 8VC, move in lock, stock, and barrel from Silicon Valley to Texas. We saw his Muskness planning to relocate essentially to Texas with all his ventures. I mean, Elon Musk, obviously. So this is all very insightful, very interesting, intriguing happenings. Several corporates are moving here also. So what's going on, guys? I mean, apart from the usual thing that we hear about tax rates and politics and so on and so forth, is there something else that's happening that's a part of a tectonic shift, if I may, or is it temporal? What are your thoughts and beliefs on this?
You want me to go first?
Absolutely.
Okay. Good. Thanks, Ram. Thanks, everybody. Thanks to Thai Global inviting us, and really pleasure to be part of this event with Sumit and Ram. Hopefully, we will try to share whatever we learned for the last few years. So I've been in Dallas for the last close to 30 years. Dallas has become a home away from home for me. Pretty much my kids are grown up here and all that. So definitely going to be more biased for Dallas, if you can see. So if you look at really, as Ram mentioned, I think, Dallas used to be telecom Mecca for the whole world. And a lot of people may not know, but, I came here because of my Motorola job. There used to be close to 70,000 engineers used to work in a 7-mile range here in Dallas. A lot of people may not know here, Nortel, you talk about Alcatel and Motorola, Ericsson, everybody used to be headquarters here. When the telecom got busted and really kind of went down, I think that's where we lost a lot of stuff, but the talent is here. I think really the one thing why, people are moving here, I'm pretty sure, as everybody knows, so good weather, and excellent airport, and good places to raise a family. That's what I did. My 2 boys are grown up here, good schools, and really, good talent is available. Especially so many Fortune 500 companies moved here, and created a lot of good paying jobs. So you have a good talent for a startup company. I think now you're seeing more and more companies are getting started here, and especially in Texas too, as Ram mentioned, where taxes, we don't have a state tax. That's one of the big thing, but also more employer friendly and business friendly. I think that makes a difference. So for me, really, when I started my first the Motorola, when we moved here, after that start a company here, people thought really in Dallas you cannot start a company. You had to move to the Bay Area. I said no, we're going to start here. We raised money, sold company. But at the same time, when I was starting a venture fund also 8 years back, a lot of people say no, you should not be doing in Dallas, you should be in the Valley. So it was hard, it was not easy. When we started a venture fund, especially we did not have the ecosystem, which we used to have a pretty good ecosystem here. With the telecom died, most the venture funds, everybody gone. But now slowly we start building it. And as Ram mentioned, there's so many people are moving here, and I'm happy to see even one venture fund also moving to Austin. I think it's making a difference for people to not only taxes, but really again the talent available in Austin, Dallas, and Houston. So that's what I see what's happening now.
Sumit?
I'll just add a couple more points. The first one I think is that there is a difference between tax benefits and tax incentives, and I think Dallas has both sides of it. The benefit of people moving also has a positive reinforcing loop. Essentially what happens is that as more and more people move, the local economy does better, real estate firms do better, the consumption increases, and hence it creates a positive loop of better economy and more opportunities. And so I think both of those aspects are driving this. I'm probably not going to say that this is going to become the next Silicon Valley, because it is not there yet. But I think the changes are happening positively. The important thing that has happened recently in the last 1 year, I think, is because of COVID, where now you can have employees work remote. Everybody understands that. And so in that case, it is much easier for people to be anywhere. And if you could be anywhere, then you would rather be in a place where you don't have to pay taxes and get tax incentives and can have better quality of life. So I think all of those aspects will continue to drive a positive momentum. One last thing I'd mention from an investment standpoint, which is that traditionally it was a very oil and gas driven economy. People made a lot of money and put in back a lot of money in the oil and gas industry. As we all know, from a secular standpoint, oil and gas is a challenging field, and hence more and more people are deciding to move that money away from oil and gas towards newer growth areas. And hence the amount of pool of capital that you have available in kind of the local communities, family offices, towards non-traditional, non-oil and gas area is suddenly increased a lot. And that's probably the last point that's driving the growth here.
We'll come back to that point about cash that's sitting out there in a second. But before that, I wanted to ask you guys, kind of challenge you guys on if there are two aspects to it. There's investors looking for opportunities. I think we kind of addressed that. There may be some specific areas that you may think are more relevant than others. If you have some points on that, I'd like to hear that. But more importantly, if I'm an entrepreneur, would you honestly, confidently be able to tell a young startup that say, hey, stay put here. We mentioned ecosystem, Dayakar. Do you believe that we have the entire ecosystem in a pretty good shape now? Capital, talent, mentoring, accelerators, just the raw energy, enthusiasm. You think I have the makings of everything? Would you be able to confidently say, yeah, don't worry, bother looking in the west and all that, stay put here. This is where it's going to happen.
I think like as Sumit said, like we're never going to be a Silicon Valley, right? I think like sometimes people try to compare every place had its own really uniqueness. I think Silicon Valley has its own uniqueness, ecosystem wise and all that. But I think really here, as you mentioned, good thing what we have seen, when we started in 2012, we did not have any accelerators. We did not have much activity, to be honest with you, right? That's the reason really we decided we had to invest, nationwide. We still do that one. Almost to 1/3 of our portfolio companies in Fund 1 are in the Valley. 1/3 were in Silicon Valley. 1/3 were in Dallas, Texas, I should say. So I think like now, having Capital Factory here and other incubators are coming in. And as you know, like Ram, you and other Thai organization also has done a pretty good job. Kind of making sure like really that activity, increases. As you mentioned, it's interesting. There's so much money available really here, right? So there's a lot of oil and gas money. There's individual investors also invest money. And you don't hear some of these companies until they get to Series B or sold a company. And that's where we're trying to educate, hey, we are here in Dallas. We're willing to invest in a Series A round and all that. Before, there was a gap between, angel funding, friends and family, all the way they're going to get to maybe Series B or Series C, or maybe sold a company. We don't even hear about these companies because we have so much of capital available. Some of the investors are able to invest by themselves directly. But we think now, we can have some institutional capital that covers. There are other funds also started here. So ecosystem is developing, especially if you look at Ram, every one of our portfolio company, we were able to get a customer for them here. Verizon, AT&T, Toyota and Sabre and Southwest Airlines, Citibank. As you know, like we have so many, banking BFSI companies, back offices here, and they're operating from here. Thousands of employees are working. They're developing technology here. So we're able to get some good customers for our portfolio companies. And that's one of the things. If we are a startup, we are bringing Silicon Valley companies to have customers here. I would say, you stay put here and you can get customers locally, at least your initial customers, to get to that $1 million, $2 million revenue.
Sumit, you have something to add to that?
Yeah, just one minor point. I think that if you are building a SaaS or kind of the new world of DevOps and SecOps and all of those different elements, and if you can be in Silicon Valley, then be in Silicon Valley. I don't think that anybody here will say no, don't be there, move here. But I think that if you're trying to build something which is more tied to real world, which I think is increasingly the innovation is going to happen. I mean, of course, software is eating the world, but I think generally at some point, it is going to interface with the real world, and the way you interface it with is a lot of hardware, semiconductors, things that are more touch feel and where you need to build something, right? Which is different than what traditional Silicon Valley companies have done. And so I think if you're in that kind of newer area, I mean, I would say space is a wonderful, wonderful area, and we can talk more about it. But I think it's, for building things like that, or in those sectors, you need different infrastructure, different setup, and given the history of Dallas being very, very strong in semiconductors, being very strong in telecom, being very strong in 5G, all of those elements I think are important. And so you need to know where you're playing. And if you have more of that aspect, then I think this is a better place. But if you're just kind of pure software, pure SaaS, then, of course, Silicon Valley is fantastic. And you can always split your people. I think your cost of operations will go down, right? If you can have few people here work remotely versus not.
Okay. Let's shift gears a little bit. We talked a little bit about cash and capital that's available. And, we used to say cash is king. We need to preserve cash and make a philosophy out of it. But now it's become a problem. I mean, there's companies and corporates are sitting on piles and piles of cash and trillions of dollars sitting around with companies and VCs and Ps not knowing where to deploy it. And so it's interesting. A lot of supply, very little demand. We all needing new avenues to deploy that cash, and companies or corporates are looking for that. So from your perspectives, what does it mean? What opportunities does it open up? Has the risk appetite gone up for investors to institutional investors? And how do you balance that with the other extreme of what used to happen in the early 2000s of irrational exuberance? So what's your thoughts and opinions on that, if I may?
Yeah. Let me start on that. So I have probably a little bit more unique perspective, just kind of being in the public markets, but also looking at the private equity side of equation. And so you may not be able to get this perspective directly. But the big thing that we have seen over sort of the last 10 years, but increasingly within the last 12 months, is that the availability of capital has increased dramatically. And one of the main drivers of that has been Fed, lowering interest rates and kind of QE being or liquidity being pumped into the system. And once you have ample liquidity, it finds ways to go wherever it can. What it means is that as your returns on sort of the normal projects go down, then investors seek more and more riskier assets with higher returns. In simple language, what that means is that anything which has much higher potential but much higher risk becomes suddenly very appealing to most people. And I think that shift has happened very dramatically in the last sort of 9 months. This is kind of more post-COVID environment. I think if you look at sort of between 2009 to 2020, I think we increased the Fed balance sheet probably by about $5 to $6 trillion, and then we've done the same amount in the last 9 months, right? So it kind of tells you how dramatic the liquidity has increased in the markets, and not just the market because it flows through. What does it mean? What it means is that the cost of capital is almost zero, which means that anything with growth or anything that has potential for future growth becomes very, very appealing. And venture capital is one of those type of assets, right? Because you're investing for future growth. And hence when you see industries like space or EVs and those different segments, sometimes people may feel that their valuations are high. People look at Tesla stock at whatever $600. This was split, after the split, which means that, and they complain about it. But I think that the reason is that because of the supply-demand imbalance, there's very few ideas and there's very few good companies that people want to invest. And so if you have a great idea and if you have a great team, you will get capital and you will have amazing amount of capital that's available in the ecosystem. And so I would say that this is probably one of the most amazing environments that are going to exist, maybe in your lifetime, right? In terms of being able to do great things, being able to do futuristic things, being able to do things that need a lot of cash, which is the exact opposite of what we all were taught in business school and in the kind of earlier days, which is, hey, generate cash flows. But generally speaking, when the cash is freely available, then the value of cash goes down and the value of cash reinvestment goes up. So in fact, if your company consumes cash and has a need for cash, it is more appealing than if we're cash flow positive from day one. I'm not trying to say burn cash for itself, but I think the businesses that can, absorb cash. This is a very finer nuance, and it'll be very hard for you to perceive it if you don't listen carefully, which is that it is about, if your business has the potential to consume more cash while still being able to generate good ROIC, or return on invested capital, then you're in a good business, or then your appeal goes up essentially. And it's a very finer nuance, but I think I want to mention that this is a good time to get bold ideas. This is a good time, to think very futuristic. Growth is in fashion, and it's very exciting.
So, Dayakar, would you agree with that? Are there not enough ideas out there? Why are kids not coming up with great new ideas, saying, okay, I want to build this new robotics company, I want to send rockets to the moon? Why are we not seeing more of it?
I think I totally agree with Sumit, and excellent points he made. I mean, that's what I think, we are also seeing, to be honest with you, even though we haven't launched our next fund yet, but we've been getting so many calls from LPs. We never had this kind of activity before, right? Saying like, hey, we would like to kind of understand where your next fund size is going to be. We would like to invest. So that's exactly, I agree with what Sumit is saying. So I think if you look at, I think it's happening, Ram, I think maybe not in Dallas, for us, we don't have that many people kind of talking about space stuff and all that futuristic stuff, but it is happening, right? If you look at it just this week itself, again, some consolidation is happening. If you look at what is Uber is doing, trying to focus on their business, because now it's a mature business. They want to focus on really, as Sumit pointed out, really kind of profits and all that. So that's the reason really some of their, as mobility stuff, and also their, two companies, actually 2 divisions, I should say, they sold this week right now into other startup companies. So these other startup companies have raised a bunch of money, and they plan to move forward with these 2 technologies what Uber has built. I think why it's not happening, I think really, if you look at, I'm seeing right now, especially from some of the stuff from UT Austin, some institutions we have here, even from I think even UT Dallas and all, some of the kids been kind of working on some technologies. I think we will see there's even a vertical drone takeoff, right? That's one thing I have seen. One company is working, even I have seen they're working with Verizon and all that. As Sumit mentioned, the good thing about in Dallas is for some of these companies, they have these major telco guys, they all, end of the day, they control the pipe, 5G and all that. You talk about AT&T and Verizon, 2 big, large, companies. There's an excellent opportunity for some of these guys to work in 5G, and how they can really become an edge computing side, how they can really process the data at the edge network, and build some of these vertical drones and all that. I think there are opportunities, but I think we will see some more coming up.
Yeah. So as you were talking, an idea came to my mind. So I think I'm also being prompted that we have to watch the time. We'll get kicked out here shortly. But why does it all have to come from Elon Musk? I think we need to commit ourselves, maybe collectively, the few of us here, to go find some new Elon Musks, maybe some of them here, to come up with the next flying taxi or industrial construction robots. There are a lot of biotech companies here. So maybe there's an opportunity for us to see if we can maybe do something along the lines of encouraging that kind of activity, maybe conduct some sessions and say, okay, here's what's happening. Capital is available, mentorship is available, and we want to hear more of you with these kinds of crazy ideas, so in quote, that we can support. Of course, we'll go through the due diligence and all that, but apart from what is happening in the field, maybe there is opportunity for us to do something more actionable,
Sure, Ram. The good news is, I don't know how much Abid Nimichwala, who used to be a former CEO of Wipro. He joined now Dallas Venture Capital as a venture partner. As you know, he's actually in on the board for the economic development for a governor council. So he has been working, as he was instrumental even bringing Toyota here, and other companies he's working on. So actually, we would like to, I know we talked about maybe we can do a session with Abid, what can we do from venture side? What can be done from people like Sumit and all that.
Yeah.
They write bigger checks than we do, and so I think there could be a session can be done by you, and we can definitely discuss those.
Let me mention one more point actually, which is I think that the biggest hurdle that I see is the traditional learning and the traditional kind of fields they're all good, but I think you have to do your own learning and you have to kind of really find these new areas. I mean, there's no course on space technology. There's no, I mean, you're not going to be able to find these things, and there's no kind of earlier entrepreneur who kind of know how to build my next software company. And that's, I think, is interesting. I mean, I'll mention a interesting fact which might be relevant, which is, so I recently learned about an asteroid which is called Psyche 16. It's a kind of like it's in the Kuiper belt, and it's one of the most dense metallic asteroid that they've found, and it has so much heavy metals in it and precious metals in it and gold and all of those elements, that if we were able to bring even like 5% of what this asteroid has on Earth, anybody who's holding gold, that price is going to go to zero, right? Just because of the supply demand there. I mean, what I'm saying is that things like these, right, they're game changers. And I think unless you make an effort to learn about what's going on and what are the new things they're going to develop, it's hard for you to figure out a business plan based upon, asteroid mining, for example. And so those are, but I think that in the next 10 years, you're going to see more innovation. You're going to see more productivity in fields that you've never imagined before. And last point you mentioned on corporate M&A, I think it's going to keep going as well, like both on the company side, because they have a lot of cash, PE has a lot of cash. I think there's just cash everywhere, right? And so we just need good ideas.
Yeah. I think on that bullish note, I think we can conclude and say again. I'll say we'll probably have to come up with some ways to engage the community here, especially the younger population in schools and incubators here and other parts. This is a broader theme, not just restricted to Dallas DFW, but as a community here, we can help coordinate, help facilitate some of that. But I want to ask Samia, Hazel, are there any questions from the audience that we can probably take one or two questions before we wrap up?
Not at this time, Ram. We can go ahead and wrap up if you're ready.
Okay.
All right.
Thank you.
Thank you, Dr. Sumit and Ram, for a fascinating discussion. You will go and check out, to the audience, I hope you'll check out TGS 2020 ORG for our other sessions. Bye for now. Thank you all again.
Thank you.
Thank you.
Thank you. Bye-bye.